All right, as we walk into trade this morning, what are we dealing with? We are not dealing with great macro cues. Bond yields globally at 1.5. The bond yields in India also have also gone higher, even though the H2 borrowing program is something which is going to have impact on the market because it's not that huge. But the big change in my book are two. Number one, we are now staring at a serious supply disruption. So if you're a company, if you're dependent on China, I think there could be a near-term challenge because the Chinese government has decided to curb power supply to the producing industries, metal, plastic, mining, and that in a sense will have a short-term impact on inflation and some of the China-dependent importers. That's one trend which I think is clearly visible. The energy complex, because of this, is at a record high, and I doubt that the metal weakness is going to sustain for a lot of time because in the short term, China cutting supply means supply crunch, and in a market which already, or in a world which is already suffering with a supply chain breakdown post-COVID, I think this will only add more fuel to the fire if you are a commodity bull. The second part is rotation, and look at how autos yesterday made a comeback. I frankly don't remember when was the last time we saw this kind of a spike in a Tata Motor or a Maruti. But on the other hand, look at the drop in a Mindtree, L&T Infotech and LTTIS. So two parallel things are at play. Pankaj Pandey, good morning. Thank you for joining us. What are you telling your clients? Should they switch from IT to auto, or should they stay invested in both?
So good morning, Nikunj. So if you look at, so given the overall concerns, especially on the energy side, what we are seeing is a sort of a sector rotation which is going on, and this has been sort of happening not now but for quite some time. We've seen metal as a pack sort of underperforming for the past 2-3 months, given the substantial outperformance previously. Similarly, pharma is sort of not doing anything at this point in time. And what we have seen in case of IT is that despite good sort of numbers, the price appreciation has been quite healthy, and which is where I think most of our target prices for any typical tier 1, tier 2 IT companies have been reached. Now, our sense is that probably markets are sort of richly valued. So one needs to sort of look at sectors where the near term and the longer term outlook is quite fine. So from that perspective, I think banks make a good case because banks' asset quality concerns are behind us. And as and when the credit growth picks up, I think bank is something which will pick up steam. Same is the case with capital goods. We haven't seen that kind of a price performance. So we are sensing initial sense of a private sector capex creeping in. And that should sort of benefit. Similarly, it is for the infra players. And I think then you have recovery plays like what we are seeing in terms of hotels or multiplexes. So all these are companies where I think best is yet to come going forward. I think in terms of auto, the challenges are still high because if you look at autos in a sort of a perfect storm, because of chip shortage, the revenue degrowth is larger than the volume degrowth. On top of it, the raw material prices, especially steel and other prices, are yet not easing substantially to sort of warrant sort of a re-rating. The other challenge is that probably the capacity or the inventory building is also not up to the mark for the festive season, and which is where our challenge is that probably festive season may not be very good for autos. Although a lot of these things are there in the prices, Nikunj, but it is still very difficult to sort of get comfortable with all these stocks, given the fact that structurally you have, say, for example, in two-wheelers, you have a better competitive product, and companies are yet to sort of do the requisite capex to sort of match to that kind of intensity. So I think besides the near-term challenges, you have structural challenges also in auto. So besides technical bounce, I would not really expect much big thing to sort of happen in auto. But yes, there are pockets like banks, capital goods, say for example, even sugar also, or infra and real estate and the associated or ancillary sectors. I think that are sort of sectors which can still do well even from current levels.
Rotation, the big theme for the markets that we'll be discussing. We'll be talking about the reopening theme as well. Delta Corp, one of the biggest beneficiaries of Goa reopening its casinos. Here's a conversation we had with the top management.
With regards to the reopening, yes, you're right. Sikkim opened somewhere in the middle of August. So it's been about a month and a half that we have been operational in Sikkim. Nepal opened around the 8th of September, and it's been about a week as far as Goa is concerned that we have opened operations. It's very, very reassuring from all the three operations perspective. And I'll take you one by one. So Sikkim, like I said, has been operational for about 45 days, about 45 days, and has shown tremendous response. The market all of a sudden has shown a lot of traction. One of the reasons, obviously, one could attribute that there are very few locations and very few places that were open and accessible and were touristy, which were available for people to go, and therefore Sikkim started finding favor. We got operational somewhere in the middle of August, and we've seen some unprecedented revenues that we clocked in Sikkim, which we haven't done while we were in regular operations. A couple of things could be attributed to that. Again, the connectivity to Sikkim is slightly better than what it was earlier. There are a few flights that have started, though not regular, and we would hope that Sikkim would do even better once the connectivity to Sikkim would improve further. As far as Nepal is concerned, one has to appreciate and understand that Nepal, we commenced operations in February 2020, and within less than a month, we actually hit a lockdown. And since then, we have never operated for the last 18-19 months. This is pretty much like the first month of operation ever for our Kathmandu business is concerned. And from whatever we have been it's about 20 days today that we have been operational. I think the traction is good enough and it is promising. And I think as things start getting stabilized and start getting normalized, we should see better traction, better inflow as far as Nepal is concerned. Coming to Goa, like I said, it's been just over a week that we have commenced operations as far as Goa is concerned. But it is very, very heartening to see that the traction that we are building over the last 1 week, 10 days is if that is any indication to go by, we should be pretty much back to our pre-COVID levels pretty soon, or rather much earlier than even what we anticipate. Having said that, yes, there are restrictions that we have to abide by, and it is in the interest of the larger the country and every one of us, which we have been always following.
And stay tuned to ET now. We will get you the full interview right here on the channel. Nikunj, you started off this show by telling us the big theme is rotation, rotation, rotation. Last week we saw the comeback of the realty stocks. This Monday it's been about the auto stocks. If this rotation continues and you see IT, which was the outperformer, the IT index has given 35 to 70% returns. If you look at the large caps, mid caps, they've given up to even 150% returns year to date. If we see a rotation there or the sector falling out of favor, will our markets be in trouble? Or let me put it this way, can that sector be out of favor?
Nantara, I think IT as a sector, in terms of where the demand and where the relevance is headed, I think this is a multi-year trend. But when I say rotation, I'm simply talking about the price action. The price action in IT has been nothing short of extraordinary. Mindtree in this year is up more than 150%. I'm just taking yesterday's correction aside. Look at Mindtree from 31st of December. That's a very powerful return for any stock or any sector which is in a boom. So this is a leadership sector. It's a leadership sector where I think there is a reason to remain bullish in the short term and the medium term on the business prospect. But the question is that in stock markets, you have to figure out how much of the good news is in the price, what could go wrong from here, and are there better opportunities somewhere elsewhere. I also worry about the fact that if bond yields they continue to rise, the way you would discount global growth stocks would be very different, because the bond yields, and I hope it does not happen, if it goes to 1.75, which it may, because now there's an inflation scare in the world because of supply disruption, then the way you would value some of the global stocks would be very different. So suddenly Nasdaq is underperforming. So I'm just bringing that point out, that are there better opportunities available if you are better, if you want to chance your arm by looking at other sectors? The answer to that is yes. But if you are an investor who says, look, I'm here for next 3-4 years, for next 3-4 years, can IT stocks give you say a double-digit return or return in single teens because earning growth is still strong? I think that's entirely conceivable. When I say rotation, I'm talking about the near term, next 2 weeks, 3 weeks, and I think that trade looks like a logical trade. Given that, so Nayantara, here's what I'm thinking. Post-COVID, global sectors outperformed, whether it was metals or IT. I think now that you got a supply chain disruption, there is going to be a challenge in terms of inflation, and more than the Indian economy, the American economy will get disrupted because of the dependence on China. So I get a sense that inward-looking sectors have a better scope to outperform. The word Swadesh, I guess watch out for Swadeshi companies more.
Where is it that you're finding opportunity in this market to buy afresh? Anything part of the rotation which is looking attractive to you to buy?
Aisha, the question is for me.
Yes, Pankaj.
So, like I highlighted, so we are liking the entire set of tier 1 banks. Then in the real estate and the ancillary segment, so besides the real estate stocks like say Oberoi, Mahindra Lifespace, we also like the housing finance companies, the likes of HFC. Then besides that, the FMEG companies, because historically we have seen that whenever the real estate does well, you have a secular double-digit kind of a growth rate in FMEG segments and housing finance companies. And then I think infra is another sector which we like. So we like the entire road-based companies, whether it is CARE or PNC Infra. Besides that, capital goods is something where our sense is that the private sector capex will sort of intensify more, and that will have benefit across the value chain. So right from a company like Siemens, which is expected to benefit from short cycle orders, to something like say welding companies, ISAB and Adore Welding. Then we also like abrasive companies like Rheinmetall Norton, so and also the bearing companies, the likes of Timken, SKF. So I think these are the pockets, our sense is that haven't seen the kind of price appreciation, and the outlook here is going to sort of get better over a period of time. And I think this is one. So these are the spaces what one can look at from the current market conditions.
Kunal, yesterday along with autos, the reopen trade as well sprung up quite nicely. Of course, the multiplex is now opening come next month in the state of Maharashtra, definitely added more fuel to the likes of a PVR and Inox. But a solid breakout here, about a 5.5% move in Indian hotels. Just very quietly, it's actually crept up to 190 rupees per share now. What is it that you're making of the moves on these two stocks?
Absolutely. I think the moves which have combined to these stocks over the last 1 week, one to 1.5 odd week, I think has been very, very strong. More importantly, I think these are stocks like Indian Hotels is not a high beta stock, but for these stocks to try and move up higher, you need a very strong and solid push coming out from volumes. And look at the stark difference in volumes for Indian Hotels in just the last 1 week as compared to the you can look at it over the last 2 to 3 months, or you can look at it over the last 6 to 7 months as well, from a YTD basis as well. So I think on both these time frames, the chunk of volumes which have happened for Indian Hotels in just the last 1 week is almost 4 times to 5 times on an average when you look at it over the last 2 to 3 months as well. So that itself tells you the fresh level of participation. So this also tells that how markets were patiently waiting out for some sort of confirmation in terms of the opening trades and or the opening of the economy, and when that happened, I think that's where we saw much better participation. So these are the kind of players and market participants who are ready to buy these stocks on the confirmation of news flow or the or the data point which has managed to come by for the names. So these are very strong set of players rather than being more of trading opportunity. This is more of strong hands which have entered into the stock in the last 1 week, and which is why you've seen this consistency of price jump for stocks like Indian Hotels. PVR on the other hand, PVR and Inox Leisure, I think both these stocks have also gone through their routine breakouts in terms of price patterns. PVR was one of the stocks which was probably trying to just about show signs of breakouts in the last 3-4 months around this 1250-1300 mark, but every time it was inching towards closer to that 1300-1350 level, it used to face a lot of resistance. But somehow this time you've seen finally the breakouts happening for PVR. Even though yesterday's candlestick pattern may not be a very, very encouraging candlestick pattern for PVR, because the stock opened much higher and then we saw some bit of profit booking coming by into this name, which also indicates that this is more to do with more trading positions which were built up into these names, and now you've seen the trading positions probably getting squared off or profit being taken off the table, and maybe some churn coming back in from this sector as well. But when you look at the overall space like PVR, Inox, Indian Hotels, Chalet Hotels, etc., many of these stocks have done phenomenally well, and which means that quality stocks like Indian Hotels, Interglobe Aviation, etc., they would continue to see buying even if there is a short-term dip. But for likes of PVR and Inox Leisure, I would probably believe that there could be more of volatility, and it's much better to try and participate when the volatility is in your favor. And when you get these stocks 5-7% lower, I think that could be a much better entry point for stocks like PVR.
Naresh, we've officially stopped discussing pharma. Where is pharma headed? Now that it is evident that the impact of third wave, thank God for that, is going to be less, what happens to the pharma companies or pharma stocks which in a sense did very well during the second wave patch, whether it was Cipla or a Cadila? Will those stocks move into hibernation?
So actually, ever since the second wave topped out, we've seen pharma go sideways. Discussions have stopped. There was a time where we would discuss about Cadila and the vaccine. There was a time when we were discussing about Cipla, but the prices have also shown. So there are two distinct differentiation in the pharma pack. One which is totally on the lower end of the trading range or at 52-week lows. So something like a Lupin, Dr. Reddy, Aurobindo Pharma, which have taken a sharp knock and have corrected and not pulling back up sharply. And they've gone into oblivion for some time. On the opposite side, you have stocks like DV's Labs or Laurus Labs, which have continued to make higher tops and higher bottoms, and now have started showing signs of topping out. The only name in the whole segment which looks interesting is Sun Pharma. This stock has started sustaining above that 700-750 mark and is now making a higher range at 750 to 800. So that is the one which has been showing relative strength to the whole pack. So out of all the other names, nothing props up on the screen. Most of them are either topping out or have taken a sharp knock and could be into a sideways or a downward range. The only one which looks very, very promising is Sun Pharma, but I would wait for a price action wherein once the stock sustains above 785, 790, that would be an indication the trend has started. And mind you, the stock is still lower than what it used to be in the peak of 2015, where this bull deal happened at 1000 plus levels. And once it sustains 785.90, that would be a confirmation. If somebody wants to take an allocation in pharma, I would go with Sun Pharma even at current levels.
Pankaj, how do you propose one should capitalize on what is happening in China? What is the easy trade? Which is one company, one sector, one name which you would say, look, this is a big disruptive change what the Chinese government is trying to do, whether it is cutting of manufacturing units or cutting power supply to some of the manufacturing units. How would you say this big change? How do you see this big change, and which is one stock or a company you would like to buy?
So for example, Nikunj, textile is one space where we have been positive. So we have seen companies like, say, for Indocount, which has got a good share of bed sheets in the US. I think sort of benefiting. What we have already seen is that the market share for Indian bed sheets in the US has gone up from about 52 odd percent to by about 10 percentage point to about 62 odd percent. And if this kind of a sort of a disruption sort of pans out, then I think it is even more beneficial for companies like that. So Indocount is something which we sort of continue to like despite the price appreciation, and our sense is that if this disruption, what we are sort of sensing from China, pans out, then textile could be a big beneficiary. So Indocount is one. Beside that, KPR Mill is another stock which we like in that space. So in general, textile has been sort of gaining market share, and government policies have also been sort of promoting, though not on the cotton side. But still, overall, this is one particular space where we haven't seen historically the kind of price performance one would have expected. So this pocket looks quite in a sweet spot.
But when we discuss what's happening in China, we shouldn't we also talk about the impact it's going to have on the specialty chemical stocks? We've seen a huge run up because of the fuel crisis, prices going up. There's going to be a rub-off effect on other stocks as well. Look at airlines. Interglobe Aviation is the best performing low-cost carrier, not in India, but in the world when you look at the stock price and the return. Are market participants going to get cautious on these kind of patches, Pankaj?
So I think, one is rather than sort of turning cautious, I see this as more sort of a good problem. I mean, what we have already seen is that whether you look at a problem in IT, if you talk about there's a problem of high attrition. Similarly, the chip shortage is again because the demand suddenly is so robust that the supply is yet to sort of catch up. So from that perspective, even if China sort of curbing supply, I think it's a sort of a good problem, not a bad problem, because again, China also needs to sort of prepare or build inventories for the festive season ahead. So from that perspective, it's a sort of a good problem to have. But yes, overall expectation is that it will have a positive rub-off in a number of sectors, including metals also, because our sense is that if they want to curb pollution, especially if next year if the games are there, then I think structurally the prices for a lot of these commodities could be a lot more higher, given the fact that China is one of the biggest sort of producers there. So obviously it's a sort of a challenge from an inflation perspective, but largely I think the commentary, whether it is domestically or globally, if you look at most of the central bankers are going to sort of look through it. In fact, in our country also 3% of the inflation of the overall inflation is driven by commodities only. So so it may not have that kind of a policy ramifications, despite the fact that the inflation could sort of inch up higher. But I am sort of not that unduly worried too much from this at this point in time. But yes, something like Europe is a bit scary given the fact that the kind of scarcity or the kind of energy prices gone up. So it's a sort of a wait and watch situation. But yes, still I'm sort of cautiously optimistic that it will have a positive rub-off rather than a negative rub-off.
Okay. Stay with us. It's that time of the show where we get the top mid-cap picks from Kunal and Naresh. Kunal, I'll come to you first. What are your recommendations from the broader markets for this Tuesday?
Well, one of the high beta stocks which has managed to come back into some momentum yesterday is Adani Enterprise. Stock managing to break past about its 50-day moving average. Candlestick pattern was also very, very attractive. The stock managed to close almost the highest point of the day, closer to 1535, 1540 range. So, would suggest a buy on Adani Enterprise in that aspect, expecting that the stock would continue to, rise up higher in terms of the momentum what it gained yesterday. 1620 as a near-term target, and stop loss could be kept at 1500 mark.
And Naresh, what about you?
So that would be a buy on MRF, which is close to a triangle breakout and saw good price action yesterday. On a breakout about 83,000, it should look towards a target price of 88,000, preempting the breakout here. It's given a range breakout of the last 2 weeks, a much bigger triangle breakout above 83,000, stop loss at 80,500.
Okay, some stock ideas coming your way. Let's also take stock of what else has been holding out. While there is this crude spike that we've seen, remember Brent is already at $80 to a barrel, and gas prices as well have been hiked or will be hiked from the month of October. Look at the chart pattern of ONGC. And Kunal, I want you to come in here. I know we're obsessed about banks, about autos, the reopen trade. Look at an ONGC and the way it's actually crept up in the last fortnight or so. What's your reading on the charts here?
Absolutely. I think from a YTD, from a month till date basis, ONGC is up some 16%, and 16% for a stock which is typically very, very low beta is something which is typically very rare. Now you look at this in the context of what transpired on ONGC in the last 4-5 months, or the 4-5 months prior to this month, and you've seen very, very subdued price action. Literally the chart patterns for ONGC in that kind of a time span was more or less like a range bound or a flattish kind of a zone, where the stock used to just about hang around closer to that 110, 120 range. That is to be larger pivot range for ONGC. But I think the breakout of this 125 mark for 120, 125 mark for ONGC has proved to be a very, very strong and a durable breakout. And it's managed to it's managed to lift off the stock in terms of many resistance, or about many of its resistances. So first resistance was of course at that 125 mark, but the bigger resistance for ONGC was the downward sloping trend line which was going on from 2014-15 for the stock, when it was at 300 rupees. So from those 300 levels, a huge resistance line that has also been breached by ONGC this time around. So these are very strong positives coming out for a large cap as well as a low beta stock like ONGC. And I think whenever you see such kind of strong signals emerging, prices moving up above the resistances, indicators, volumes supporting very well, and the prices managing to break out of its multi-years of resistance trend line, those are very strong indications that a new trend has emerged out for ONGC. So I believe that for participants who are looking out to add many of the PSU stocks, and specifically the ones which are showing signs of a better trend than what they were maybe 3-4 months back, I think ONGC should be on the top of the list in that regards.
Okay, that's the take coming in on OMCs. But in the meantime, it's time for an ET Now exclusive. And Raymond, that's been gaining about almost 12% this month alone and announced some corporate restructuring. My colleague Ajay Sharma is here with exclusive details on what's really brewing up at Raymond. Ajay?
Well, that's correct. Raymond's is in focus. In fact, just last evening, they have spoken about a business reorganization. We are learning from our sources exclusively that this is a precursor to a value unlocking exercise which the company is likely to take. We understand that they are planning an IPO of their engineering division. Now, engineering division, which they are consolidating now, will comprise of machine tools, auto component, JK files, all under one roof. And our sources are telling us that Raymond is planning to launch an IPO and raise around 700 crore via the IPO of engineering business. We understand that the kind of back of the envelope calculations are happening. The engineering business valuation are coming around anywhere around 1800 crore to 2000 crore, and about 700 crore, which is 1/3 of that, will be offered via IPO. So now we understand that shareholder maximization, value maximization and value unlocking is on the mind of the management. They have close to 1600 crore as far as the overall debt is concerned on Raymond books. We understand that the funds which will be raised will be utilized to reduce this debt. The company engineering division is doing phenomenally well. It has free cash flows and very high EBITDA, and ROCE also upwards of 30%. So they don't need money for growing the business. The business is already doing well. What the management wants to do is to reduce debt. Around 1600 crore is the kind of debt on Raymond's consolidated books, and they want to reduce this. When we spoke to the management regarding this, they said that they will not respond to market speculation, but yes, debt reduction is a priority and they're looking in that direction, but beyond that they did not offer. So it will be interesting to see how the market sees this.
I want to go. Okay, well Ajay, thanks for that news update. Pankaj, which are the one or two IPOs in the month of October which you would say could be the dhamaka IPOs? Because there are about 8-10 IPOs, some of them are large ones, which are lined up in next 3 to 6 weeks.
So bit difficult to sort of comment, because I still don't know whether we are in which of the companies we are sort of lead managers. So I will not sort of hazard a guess, but of the recent IPOs, the one company business model which I have really liked was Ease My Trip. I think this is one particular company which we have liked and we have initiated coverage upon. It's also sort of a recovery play, and compared to competitors big in size, we have seen this company sort of being profitable because of the fact that the cost structure of this company is quite low. Something similar kind of a trade we have seen in InfoEdge when it was listed. So I think this is one particular company where the opportunity size is large, the cost structure is quite efficient. And so this is one company which I have liked of late within the recently listed companies.
I was just thinking through it, that we all are talking about unlock trade. One obvious unlock trade is actually VIP. And let's look at the 3-month price action in a stock like VIP. No travel, no luggage sale. Lot of travel, more luggage sale. And remember, a category like travel bags or some of these luggage businesses, they are seriously going to change in the way how the manufacturing would evolve. What is happening in China will have a huge impact, and it will be a permanent impact on the way how the manufacturing sector would move. And that is where I think you will see a lot of change. In last 3 months, VIP is up by about 100 rupees. So while we are talking about travel, tourism, hotel, hospitality, VIP, complete proxy on the way how travel and tourism would move. Another play where I think markets have not really revisited is entire fashion retail space, whether it is Aditya Birla Fashion, Arvind Fashion. It's obvious that when discretionary spend will start, and trust me, this time the service sector is doing so well that branded apparel as a category will do well. You talk to V-Mart retail, you look at the numbers which you're getting from a Zara or a Trent or Arvind Fashion, Raymond's also. This is one category where I genuinely feel that market have not really realize the true potential of it. V-Mart on your screen last 3-4 months, it's up at 35.29. D-Mart, well, just aside of it, that stock surprises everybody, both in terms of a surge and in terms of an approach. On the charts, Nuresh, where is D-Mart headed?
It's very tough to take a call here. It's been in a slow and steady uptrend. So unlike stocks which go into such big moves, which tend to see 3-5%, 10% daily moves at least one of the days, the stock went slow and steadily from 3,300 to 4,000, making 2% moves, 1% moves day over the last 4-5 months. Finally, we've seen a spike up between 4,000 to 4,500. Now that spike up things seems like a blowout top in the short term possibly. So we could be topping out here at 4,500, 4,600 zones and get into a sideways pause for some time between 4,000 to 4,600. If we cross 4,600, the view changes in terms of that the momentum is again gone up. So as of now, it's a good time for a pause into the stock. And the stock has a tendency to go in a pause for a few months. So after the initial recovery in 2020, the stock went sideways for 4-5 months. I think we are setting up for a similar move.
Okay. At this juncture, I'd like to thank Pankaj for being live with us on today's edition of The Market. Just a few minutes to go till the pre-market rates are with us. Nikunj, you've already discussed that the big theme today is going to be, and it's going to continue to be, rotation, rotation, rotation. You're keeping an eye out as far as the Swadeshi stocks also go. The Atmanirbhar theme that started out, of course, of last week. But auto sector, it made the comeback yesterday. Once again, I'm going to ask, is it because the fundamentals are improving? Look at the kind of commentary that we're getting from Maruti. Or is this, we had to see a relief rally?
Nantara, what's happening in China in terms of a supply disruption, and adding to that is this entire container shortage and the breakdown of some of the logistics supply chain, I think is huge. There are going to be implications of that which could be felt from 3 to 12 months, or it could go beyond 12 months. So it is a forced change, but a lot of changes are forced in nature. The implications of this forced change would be that if you are a company who is completely dependent on China for components or for raw material, or for that matter even in terms of outsourcing manufactured products, there could be a bit of a near-term challenge. And that means the relevance of some of the domestic companies which are competing with Chinese products, and they were finding it difficult because of the price and because of the availability in the scale, there could be an edge up. Because in the short term, some of the manufacturing companies in India would suddenly start enjoying pricing power. That's one small theme. Second, in the near term, because there is going to be a supply disruption, I think the demand for metals will remain artificially high because supply is not going to come from China. So that also means that inflation and in near term inflation concerns will continue to mount us, which means metals after a lot of metal will come back. I'm not so sure about banks now, because if bond yields are rising and local bond yields are rising, surely it will have an impact on it. Now this is something which nobody anticipated, that the Chinese government would go so heavy on cracking down the tech companies, they will go against the gaming companies, and now in order to comply to that entire ESG guideline and follow universal policy of income to all, will start cutting down power supply. This may be a temporary move, but it's a move which in a sense shakes you, because when a well integrated supply chain in the world changes because of external factors, it forces you to think and rethink your entire basis of manufacturing. So I think manufacturing as a sector, the renaissance moment is what we were looking for. It unfortunately got triggered because of COVID, and now the policies of the Chinese government will ensure that the entire manufacturing sector in India in a sense goes through a massive reboot. Alright, first rates will just start coming in on your screen now, and the first rates are the opening rates. We'll wait for the first rates to kick in, and when markets are staging so much of strength, we all look forward to another strong day of open, and the strong day of open is there. Nifty is up, or the bank Nifty is up by 0.5%. Sensex is up by about, Nifty is up by 25 points, and you got Bank Nifty which is up by 130 points. So markets are picking it up from where they left yesterday, which is that outperformance in banks and auto continues. IT in a sense has been, little bit of profit booking or skim from the top has kicked in IT, so I'm not surprised to see a Mindtree or a LTTIS, or for that matter the mid-cap IT stocks, they are correcting. Yesterday the day belonged to autos, and today also I think autos are picking it up from where they left yesterday. So autos are in focus and autos are in demand, which is Tata Motors, Bajaj Auto, Maruti, Hero MotoCorp and Ashok Leyland. So auto is turning out to be the go-to sector. Z, well, it's yes and no, so it's turned volatile. But I want to look at some of the energy stocks, especially the Coal India. Think about it. Coal India would be a huge beneficiary if global coal prices they go higher. NTPC will not be a beneficiary. A viewer should not do a mistake because there is a problem of power in China. That does not mean that India is going to export power to China. Don't think like this. But NTPC, in sentimentally, I think it's a stock which is getting re-rated. Suddenly all the ESG concerns are getting ignored by investors when it comes to NTPC and Coal India. 1 rupee higher for NTPC, about 0.5% higher for Coal India. Autos is the top draw, and it's another good day of trade for Indian markets, at least in the first 60 seconds of trade. Aisha?
Some of the other stocks which are in focus are ONGC and Oil India, in continuation with the theme that Nikunj was just talking about. Crude at 80 and a gas price hike as well coming in from October. That's going to augur well for ONGC as well as Oil India. Not such great news for OMCs as well as paint companies perhaps, because especially for paint companies, their raw material costs go significantly higher, with crude or Brent now in specific getting back to $80 per barrel levels. Raymond, Ajay Sharma, my colleague, just reported on the news that the company is keen to unlock value for shareholders via business reorganization, and they're planning to launch an IPO for their engineering business, planning to raise about 700 crore rupees via the IPO, valuing the engineering arm close to about 2,000 crore rupees. So look out for what Raymond does in trade today. Well, Tata Motors surely is climbing up. I think the big trend today is that technology is once again taking a back seat, much like yesterday. Today too, the biggest losers on the index are all technology plays. So Techem is down 1.5%, Infosys down 1.5%, over a 1% cut coming in for HCL Technologies, and Wipro as well, along with TCS, is also down. Coal India looking good, yes. Tata Motors is well holding out. Cottage Consumer Products is seeing a surge of about 1.25%, and IRCTC is back in the limelight. Another 2.5% bump up coming in for this stock. We'll talk about the reopened trade, and IRCTC as well has been the first one in the pack actually to move up. I don't know whether it's the reopened trade or whether it's the markets leaning towards platform companies. But IRCTC surely has been one darling of the market, and today too it holds up a nice 2.25%. I also want to check in on what the likes of Indian Hotels and PVR are up to. These were big movers in trade yesterday. So let's just check on these names in today's trading session. They will just come up for you on your screens. We've also got a SEBI board meet to consider the NSE IPO. So just look out for that development as well. That's also going to be a little bit critical. Nikunj?
Kenneth Andrade joins us. Let's take our conversation forward. Kenneth, good morning. Thank you for joining us. Kenneth, a lot